Hello everyone and welcome to the Quantpedia Explains Trading Strategies video series. Today, we will discuss front-running in international ETFs.
Hello everyone, my name is Radovan Vojtko, I'm CEO and Head of Research at Quantpedia. Today we will discuss once again seasonality trading strategy. So seasonality trading is quite popular. We have more than 100 seasonality strategies in our database. The seasonality strategy that I plan to discuss today is basically the part of the cycle. I would like to discuss how we can front run the seasonality in country ETFs. And we already discussed the seasonality front running in commodities. So there is independent article, independent video about that. Then we discussed front running seasonality in the US stock sectors. We discussed seasonality patterns in crisis hedge portfolios. In all of those cases, what we found out is that there is a strong seasonal pattern, but it's not as you expect. Let's imagine that it's end of the April and we would like to buy the best country ETFs for the May. So we can check out what was the performance in the May in the previous year. So this year is 2025. We can check what was the performance of the ETFs in the year 2024 in the May, and we can try to buy those ETFs at the end of the April. Unfortunately, this is not how the seasonality works because this is easy way how you can check the seasonality, and because the ETF market is very liquid and it doesn't matter if it is ETF market for commodities or for stock sectors or crisis hedge portfolios or in our case for country ETFs. Because those ETFs are very liquid, what happens is that the professional portfolio managers, they front run this seasonality. So they buy these ETFs or these countries not at the end of the April, but actually at the end of the March. So there is a strong seasonal trend, but the month before the actual seasonality. This is how it works like. So those assets, because they are tradable assets, they are subject to front running. The professional investors anticipate the seasonal trends and they start accumulating the positions before the expected seasonality manifests. This is how does it look like. So what we did for this analysis, we downloaded the data for 23 country ETFs from all around the world. So there are some emerging market countries, there are developed countries, there is even the US in the SPI or as the SPI ETF. So all of the major developed countries, all of the major emerging market countries. Most of these ETFs were launched in 1996, the second largest group in 2000. So we started our backtest in the year 2000 because we do not have the biggest sample as we can. Not all of the ETFs started in 2000. 3 other countries, so the China, India, and South Africa ETFs were introduced later in 2003, 4, 2009. But we did not wanted to wait until 2009, so we started in 2000 as a starting point, and then the last 3 ETFs were included gradually after inception. We had to make the trade-off between the data availability and the number of ETFs in the portfolio. So we end up with our analysis in February 2025. So we used the monthly data, monthly performance, so the monthly data is enough. What is the trading strategy itself? So once again, at the end of each month, we apply the cross-sectional approach to seasonality. So we ranked performance of all included ETFs based on their returns from the month T-11. So what does it mean? At the end of the March, we are looking for the investments for April and they are ranked on their performance in the May of the previous year. What does it mean? We expect that at the end of the March, the professional investors will start to buy ETFs that are performing well in the May previous year, and this year they will perform well in the April. So that's the reason why they accumulate this position at the end of the March. So this is, how the seasonality look like. So the seasonality is front run. So at the end of the March, we are not looking at, the April performance, the previous year, but we are looking on the performance of the May because, we expect the professional investor will start to accumulate position in the April. So we will like to front run that seasonality. Now the question is how many ETFs should we include in our portfolio? We tested multiple thresholds. So we tested Vigentile, so it's top 5%, top 10%, top 20%, top 25, 33, and top half. So basically we applied the front running strategy and we tested multiple different strategies. So we tried to select top 1, 2, 3, etc. until up to top 11 ETFs. And this is how does it look like. Here we have a benchmark. So what is the benchmark? Because we have the investment universe that consists of 23 ETFs, the benchmark is basically equally weighted investment universe of all those 23 ETFs because that's your benchmark. And you can select ETFs randomly, and in our case we tested systematic trading strategy, and we are checking whether the systematic trading strategy outperforms the benchmark. So the benchmark is equally weighted investment universe of all ETFs. And we can take a look on the results. What we can see in the results, all of the strategies except one, so except the strategy that selects only the one best performing strategy based on the seasonality, outperforms the benchmark. That's the great result, and we like to see the result like that, because what does it mean is that the strategy is robust. From 11 tested strategies, 10 of them that are based on front-running seasonality outperform the benchmark, so that's great. I mean, what we can see from the results from the table when you check out the table, so you will see that there is a sweet spot between 3 and 8 ETFs that you can select to your final portfolio. Why 3 and why 8? I mean, when you select less than 3 ETFs, you are not diversified enough. So, I mean, your performance is very, very erratic and has high volatility. So it's not the best idea to select just, I mean, the handful like 1 or 2 ETFs based on the seasonality. It's also not a very good idea to select too much ETFs, because then you are, I mean, too diversified. So, I mean, your front-running signal is too diluted among too many ETFs. So the sweet spot is probably to pick between 3 to 8 ETFs. Now the question is, how much should we pick? I mean, should we pick like the best 5 or best 6? So what is our recommendation is based on the papers that we wrote before, and based on the test we wrote before. It's not a good idea to select just one parameter for the strategy. It's good to be diversified among the parameters. So in our case, we would like to base our strategy as the average of 3, 4, 5, 6, 7, and 8 ETFs. So what does it mean? When you have your portfolio, you will split your portfolio into 6 parts, so 6 sub portfolios, and each sub portfolio is run or managed by one strategy. So in one sub portfolio you will select top 3, another one you will select top 4, top 5, top 6, 7, and 8. And I mean, in this case, you will be diversified among all of the sub strategies. All of the sub strategies will be based on the front running of the seasonality, but your portfolio will be less volatile, and you will not be afraid that in case the parameter, I mean, what is the correct number of ETFs to select into your portfolio will change in the future. Because I mean, definitely it will change in the future, but I mean, in this case, you are diversified. So our recommendation is to not just base the trading on one strategy, but diversify them on 6 different front-running strategies. So I mean, in the end, you have the performance around 10%, standard deviation around 19, maximum drawdown of 55%, but you are, I mean, significantly outperforming the benchmark based on the Sharpe ratio, based on the Kalman ratio, based on all of the ratios. This is the great way how to implement the long-only seasonality. I mean, if you are interested into long-short, or if you are interested in the other asset class like commodities or equity sectors, feel free to check out other papers or other articles that we wrote about this strategy. And if your investment universe is country ETFs, or you are interested in international ETF market or international stock market, the front running of the seasonality is a great way how to get some alpha and how to squeeze some juice out of the markets. So I hope that you liked this video. Please give us the like, please subscribe to our channel. Feel free to join Quantpedia. Feel free to check out our pricing offer. I mean, we have over 1,000 strategies in our database. We do a lot of the research, and I mean, you will be satisfied with our services. So thank you very much.
Are you interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.